A nice 150 point rally in Nifty and a good healthy 550 points rally in Bank Nifty. And was there an entry for me today? None. See, my strategy is very simple. My strategy is based on strong trends in the market. So what do I trade on? I trade only on the CPR and the Cambrella pivots, and especially which levels of the Cambrella, the L3 and the L4. That's it. I do not trade on anything else. And on the floor pivot side, I would use the CPR as well as the S1 and sometimes the S2 pivot. That's it. Now, what do I do with these pivots? See, these pivots are simple resistances and supports which are marked or which have been derived from the previous price action. That is the previous session's price action. So what do I do here? I look at the CPRs for the day. So for instance, now you can see here that this is the CPR for yesterday and this is the CPR for today. This is in Nifty and I am on the 5-minute time frame of Nifty. So now you can see the time frame here, and as Nifty opened below the current CPR, what does it tell me? See, the close yesterday was on an intraday basis above the CPR of yesterday. If I had seen an open which was above the bottom central pivot for today's CPR, then my bias on the market would have been bullish today. But the open that is below the L3 pivot, which is the CPR, and below the H3 pivot, which is this pivot here along with the top central, it shows me that my bias towards the upside, which I had before the open, is now rejected. Why? Because of the change in sentiment overnight. You can see that in Bank Nifty as well. You can see that the CPR was here yesterday and today the CPR was higher value, and as well the closing price, you can check, was higher than the previous CPR. So today's closing price being below the CPR, that is below today's CPR, it has completely rejected my upside bias. So rejected bias means what? Should I start selling at any instance that I see? Not at all. I see my bias is rejected. It means that my bias doesn't become bearish right away. I mean, even if it does become bearish, it depends on the price action. What is the price action telling me? What are candlesticks telling me? Where is the market actually headed towards? Do I have any specific reason to believe that the market will keep falling? Now you can see here in Bank Nifty that we had a PDL which was at this level, which was nearly at the level of the, or exactly at the same level as the Cambrella L3 pivot. Plus we had an S1 support below it. And you can see how Bank Nifty opened and it took support right at the L3 pivot, and then you can see this wicks on the bottom which suggested strong buying force at that level. Going to Nifty, you can see how Nifty fell and kept falling for the initial 25 minutes to 30 minutes. You can see that up to about 9:45 a.m., which was, I mean, the market opens around 9:15. So up to about 9:45 a.m., the market did not really show any recovery in price. It kept falling for the first 30 minutes and then it shot up from there. And where was the region it shot up from? It was from the S2 pivot. You can see the S2 pivot is here and the L4 is here. And it basically opened within the H3L3 layer, which is the third layer of Cambrella. And then it went and closed right outside the L3 layer, which was the first 5-minute candle itself. And you can see that the previous day low was here. And the previous day low being there and the open being within the previous day's range, and then it closes outside the range, gives a bearish tail to the market. And then there was this big red candle, then another big red candle, and you can see how it took support here. You can see the wick here, and after that the price reversed. So is there any real entry point at this level? Can we go to the 15-minute time frame? On the 15-minute time frame, we can clearly see that there is an outside bar reversal pattern that price has shown us today. You can see this pattern here. This is an outside bar pattern, and that has been shown on a reversal basis of the 15-minute time frame. But the thing is, what has my bias told me? My bias is now towards the downside. So where should I search for trades? If the price is opened between H3 and L3, I should search for trades around the H3 pivot to go short on the market. What sort of bias did I have in Bank Nifty? Now Bank Nifty had actually shown me a reversal, a rejection of the bias after the reversal of price action. So if price has closed above its CPR yesterday and today it opens flat but below the current day CPR, it by the system tells me that it is a sign of weakness in the market. But that doesn't mean that I immediately start to go short on this particular red candle or any red candle that I see. No, I will not do that. I'll basically wait for a reversal back to either the H3 level or the H4 level to look for any reversal signs. But if you can see around the H3 level, you did not see any reversal signs here. And anyway, I was not interested in trading in Bank Nifty. I was only watching Nifty today for the simple reason that Nifty was showing a stronger signal to me of retaining that bearishness. So if the market is showing some sort of a bearish sign here, I need to see if the market pulls back to the H3 level where I can go short on. But see, now what is the price level here? The price level is 18200, correct? So it is around the 18200 mark that it goes and it starts to reverse from. And what is the price level where I am looking to short? It is around 18330. So 18200 to 18330 is the level that I need the price to come back to, where I can look to short the market. Now why would I look to short the market at that level? Because my bias is rejected, and if the open is between H3 and L3, then clearly my system says that I should be looking for a reversal at somewhere around the CPR. Now you can see here that price opened within the previous day's range, and again after it reverses back into the previous day's range, then something called responsive buying is taking place. Responsive buyers have taken the market up by 100 points, after which I am looking to sell at this point. It makes no sense. It absolutely makes no sense. So my system tells me that I should be looking to go short in the market today, but I should also have some sort of my own logic there. My system has to be overridden by my logic every time. See, my logic could be right or wrong, yes, but if my system is telling me something and I don't apply any logic to it, then there is no point in really using that system, because my system is a mechanical system. There is always a CTA to my system. What is this? This is a call to action. So what is my call to action? That the H3 level is a selling level, the L3 level is a buying level, the H4 is the last line of resistance, and the L4 is the last line of support. So whenever my bias is confirmed, I will trade in that direction, but that also has to be followed by logic. So I had tweeted even today morning itself that it is my understanding of the market that I will look to open short trades today. But if the price has actually fallen to 18200, and from 18200 I'm waiting for a recovery up to 18330, that is 130 points in Nifty, and then I'm looking to short the market, then it really does not make any sense. And exactly that is what happened today. It actually did go above the level of the H3 here. You can see this level H3 has been broken by this particular candle here. What was the time here? It was 2 p.m. and at 2 p.m. then later it formed this evening star pattern, after which if I had even initiated the trade here, a short entry here, then my stop loss would have been higher and I would have made some small amount of money by the end of the market. But again, should I enter that late? And especially after responsive buyers have taken the market up 130 points, now am I ready to stand against those responsive buyers? I'm not ready to stand against those responsive buyers. Why are they responsive? Because they are basically pushing the price within the previous day's range from outside the previous day's range. So this being the previous day low here, and the price is coming from much below it, and then they pushed the price up into the previous day's range again. So you can see that yesterday's trading range was mostly this range, after which the price actually closed within that range, and again today price was pushed within that range by responsive buyers. So the responsive sellers have to come and join the party so that they can push the price lower from here. And so here I don't really think that there is really any logic in siding against the stronger party, the dominant party here, which were the buyers today, and then at 2 p.m. going short on the market. So even in spite of the fact that my system fires here and it fires a signal here and price action tells me the same thing, plus my location is also right, I don't open a trade there. So had it been early and had it immediately reversed after the L3 pivot and taken off for the H3 pivot, and had there been really any time, then it would have been a different story. I might have seen for a reversal entry, or might have thought about a reversal entry. But and again, if this opening would have been somewhere a little bit higher than where it opened today, then it would have been a much better place to trade from, had there been a pullback right up to the H3 pivot. But this sort of a rally, do I feel any FOMO? Do I feel any fear of missing out? Absolutely not. I just let it go. because in spite of the fact that I just showed you the outside bar and I knew that that outside bar was forming right at the an important location. I'll just take you to the 15-minute time frame again and I'll show you the location here. So you can see that it is forming right at the S2 pivot, the outside bar, and in spite of the fact that I was confident about this outside bar reversal pattern on the 15-minute, I still did not take that long trade simply because the price was trading below the current day CPR and I do not take a chance with the CPR. So the chances of the CPR uh, pulling the price up like a magnet, especially when the previous close is very close to the current day CPR, are very high. But these trades are also not very oftenly seen. They're not very regularly seen. So it's best that I trade from the perspective of the trades that I see pretty regularly and those trades that I can enter pretty regularly and those trades that can give me a profit more regularly than trades that happen sometimes maybe once in 15 days or once in 30 days. So that's just my thinking. If you have any trend following strategy and you've made profits today, I'm happy for you. So now looking at this sort of price action in Nifty, if we turn on the levels for Monday, 15th of May, what do we have here? Since we have a wide ranging day today, we have a wide CPR for that day, that is on Monday, and we have an L3 level within the CPR, and the price has closed within today's CPR, but it has closed above the bottom central pivot, which gives me which gives me a not a very strong bullish bias in the market. But given the fact that price has actually closed within the H3L3 level, you can see that this is the H3L3 level for today and the H3L3 level for tomorrow is elevated. So it gives me a good sign that if I see any open of the price above the bottom central pivot or any open of the price above the L3 pivot for Monday, then I will look for buying opportunities somewhere around the area of the CPR. So any open above it, so that open could be here as well. That doesn't matter. I will wait for a pullback to this area and then I'll look to go long on the market. So I am pretty much long on the market on that day, but that is because of the fact that the price will open above the CPR. I'm talking about the fact that the price will open above the CPR. Now you can see that the CPR itself, if you can see today's CPR is at this level and the CPR for the next session is at this level. So what does it show us? It shows us a descending CPR. So that means that any open below the bottom central pivot, I told you that the open has to be above the bottom central to maintain a bullish bias. But if it is below, then any open at or below the BC and my bias will completely change towards the bearish side. So then I will look to sell somewhere around the CPR, that is the central pivot, or the L3 level. So you have to be careful because we are not exactly seeing a very strong bullish uptrend in the market right now, at least as far as the CPR go. And you can see that in Bank Nifty we again have a higher value CPR today. So today also we had a higher value CPR and on Monday also we have a higher value CPR and we have an L3 level which is within the CPR, plus the closing in Bank Nifty is also ahead of the or above the current day CPR. Now any open above the BC level of the CPR, which is the bottom central, will give me a bullish sign on the market. And we can see that the H3L3 levels are also elevated. So I'll just mark the H3L3 levels for you so it will be easier for you to understand. These are the H3L3 levels and this is the H3L3 levels. This is the third layer of the Cambrella. I'll just write the third layer here. That is the Cambrella third layer. So the call to action is always the same. The L3 level will be a buying level if the market poses the acceptance of a bullish bias for Monday. And I have extended this particular virgin CPR for Monday as well because it will tend to stay strong for a couple of sessions, and I'm going to trade out on it immediately on Monday because my L4 level is right up here. If my L4 level or my L3 level are within this particular CPR or the virgin CPR, then I will tend to trade on that because I mostly trade on confluence of pivots. So I'm very happy to see confluence of pivots. Unfortunately in Nifty we are seeing a particular lower value CPR which does not give us much confidence as far as the trend is concerned. But as I told you, if the open is anywhere above the bottom central, then it will reject that bias. Normally I say that the open should be above the entire CPR, but today for Monday, since we have the L3 pivot right within the CPR and just above the bottom central, any open above this level should be seen as a buying opportunity. Of course you need to see if there is any particular positive sign or a green a green candlestick or a reversal bullish sign at that particular level. If you just see any touch of a candlestick or a red candle touching the L3 or the bottom central, don't just blindly go long on that candle. Be careful trading that level, because as I'm just telling you, as I'm telling you right now, the level of the CPR is descending. So don't forget that we have a descending CPR for the next session, and that means that we do not have a confirmed bullish bias as far as this day is concerned. We will only be able to confirm a bullish bias if the price action were to open above the L3 level. I'm repeating myself because I don't want any of you to make any mistakes. And again, the fact that price action will be trading or opening within the previous day's range, since the previous day's range was very wide, you can probably wait for price to go up, then come down again, and then if you find a double bottom pattern here, go long on that pattern, provided you have a wide enough IBH and IBL. So the initial balance, that is the first 1 hour high and low, should be wide enough for you to be able to trade on a particular double bottom pattern. That is if the bottom central pivot is holding. Everything will be dictated by the CPR. So that is my system. It is very simple and it just gives me objectivity in the market. It takes away a lot of questionability out of price action, and it takes away the noise. So I'm only interested in what the price is doing at important levels in the market on that particular day. So having said that, I hope you have liked this video. If you have, then please hit the like button, subscribe, and hit the bell icon also. Thanks guys. I'll catch you in the next one. Any questions, I'll be happy to answer them. So do let me know in the comment section below. Thank you. Bye-bye.